Stay star viewers, welcome back. So till now we were learning from day 1 to till today. We were learning different concepts like definitions, functions, importance, advantages, disadvantages, who are the users. These all points whenever we were discussing, I think you found some common points in everything. So that's called the psychological process. And mainly in accounting, it's really important and each step is related with the next step. Like when you know what is the concept and who are the users, you will know what is the accounting process actually. So I want you all to maintain a note of all my classes that will help you better in understanding what is accounting. Okay. So moving into this topic, today we are going to learn what is the concepts and conventions. So basically concepts. First, delete a point from your mind that such a lengthy topic, such a brief topic, many points to remember. No. Just listen it like a music or playing video. Okay, it's really a interesting topic which I want to convey today. So basically these concepts are nothing but the procedures or the process that is going on in daily life in accounting life cycle. Okay, so how your day goes, like from morning, waking up, dressing up, watching some movies, having that in this lockdown time. The same way even accounting procedures have the thing. So that process itself is filtered and conveyed as a concepts. So let's discuss each of them in detail now. Okay. So firstly, business entity concept. Here I would say this business and the owners are two different parts. Here this concept says business or an entity has a separate legal independent existence and that is separate from its owners, shareholders, investors, etc. Okay, so if you think no, owners are the people who are investing in this business. No, whatever the amount is invested in business is the business amount and its property, and what are the assets or liabilities, whatever are there in owner's account is owner itself. For one point I'll tell you that you can understand. Whenever you get a capital into your business, right? So that capital, we call it as a liability in balance sheet. So we can call it as an asset also, because we are getting it in the business, like how we get the assets and land. But why do we call it liability? Because as we are the owners, we are getting, and that business is liable to pay for us. That amount we are investing in the business, so on the other day the business is paying us. So if the business is going into losses, the business is only left in losses, but not the owners. I hope you are clear with this. The next is going concern concept. So here this concept believes whatever the hurdles are there in the business, whatever losses, whatever profits occur, it's still based on the principle called going concern concept. Like for example, from the day you were born to till now, what all happened in your life? You have many regrets, many controversies, many accidents and all, but also still at the end of the day you'll have a positive motto to start your life again, to not to repeat it again. So in the same way, whatever the losses or the profits are, still the business wants to continue. That's what the going concern concept says. And next, money measurement concept. So money measurement concept, here I already told you to remember your definition daily. So that is AICPA 1941. Don't forget it. It is really important in each and every aspect. It only told us it is the art of recording, classifying, summarizing, analyzing and interpreting and communicating the results that are in the part of monetary and at least a part of financial character. Okay, so I'll keep this definition mostly repeating in my videos so that you'll have an idea and you'll learn that definition very easily. And then money measurement concept also says the same. that accountancy only considers the monetary transactions. That is the quantitative aspect but not the qualitative. Qualitative, I also told you what is qualitative. Clear? So that's what money measurement concept says. Then cost concept. Here this is somewhat similar to going concern concept. Here this concept says us that actually whenever we record the transactions in the books of accounts, we actually take the actual price of the product, right? So if the product is of 10 rupees, you will just put it as 10 rupees, not as 20 rupees. So when we are taking an actual price of a product, we also have a responsibility or a duty of taking the actual cost into consideration. So it says when you are taking actual price, you should also consider the actual cost of the product. What is the cost incurred in manufacturing, packing? There are many things included in that process. So cost concept says even cost should be considered along with price. Then dual aspect concept. So this says whenever there is a topic going on in between two of people or two parties, it's a dual aspect concept. Okay, it's not a mono act. You're not talking to yourself or you're not talking to a wall or a board. You're talking to another person, another party. So that's called two people, dual, and that aspect can be anything. It can be either because regarding interviews, regarding some orientations, or regarding accountancy also. So that's called dual aspect concept, and here it involves two parties, say X and Y. X and Y. Here X is a seller, Y is the buyer, and Y comes to X to buy 100 books. Okay, costing 30 rupees each, totally 3000. So here X gets money and Y gets the books. So indeed both are getting advantage. So X is getting the money and well as Y is getting the books. So that is called dual aspect concept, where both are getting benefited. Okay. That's called. So the best example of dual aspect concept is double entry system of bookkeeping. Okay, double entry system. Then accounting period concept. So basically there are two types of years which normally all the people in the company they follow. That is financial year and calendar year. Okay, financial year says the financial year starts from 1st April to 31st March, and calendar year is, everyone know, that is Jan 1st to 31st December. Okay, so that is an accounting period concept. So the idea of having a financial year, so we have new year, we have many years, like in the same way we also have an accounting year for basically for financial concepts. So that's called accounting period concept. And then period matching of cost revenue concept. So what is this now? It is also related to accounting period concept. It says that you should have a knowledge or you should be responsible, I mean it's your duty to check, to balance your cost and revenue within the accounting period. So that's what called as matching of cost and revenue. The amount of cost you have incurred in manufacturing a product and when you sold the revenue at the end of the year which you get, that should be balanced. That's what, and that too within the accounting period, is what called as period matching of cost revenue concept. Then last but not least, that is realization concept. Here it says that you have to realize what all the revenue you have collected at the end of the year. That's called realization concept. Simple and clear. I have repeated the points again and again so that you can understand. And let's revise it once again. Business entity concept, going concern concept, money measurement concept, cost concept, dual aspect concept, accounting period concept, period matching of cost, revenue concept, and then last is realization concept. When these are the concepts, we also have the conventions that is derived from this. Concepts derive conventions. So basically this accounting procedure is divided and linked with theory and practical procedures. So that is basically concepts and conventions. Now we are having 4 conventions which we are discussing. So that is convention of conservatism, convention of disclosure, convention of consistency, and convention of materiality. So convention of conservatism says you have to anticipate the losses in the entry of the business itself. So exit in entry. So you should always anticipate the losses which you get but not the profits. And your unrealized or unearned or unexpected profits should not be reflected in the books of accounts. And that is because you want to show the low net, that you are getting a low net income. And whatever it is, it will be shown differently. So that's called conservatism. Exit in entry is the correct point which you can remember. That will strike out this point you. And then the next is full disclosure. So here I have explained you yesterday like different types of users of accountancy information. So they have the right to know. So when they have the right to know, who are the users? Now tell me. Yesterday I have told you, right? So the users are owners, proprietors, and government, investors, employees, citizens, and many people, creditors, etc. So it's their right to know what all is happening in the company where they are investing. And it is also the responsibility of the company to disclose all the financial matters in a true way that is legal and according to the laws. Okay, that's called convention of full disclosure. And then convention of consistency. See, basically as I told you yesterday itself, there are 3 types of businesses: sole proprietorship, partnership, and joint stock. So this convention mainly says whatever you follow from the starting, carry on to the end also. It's not like you have opted for a procedure in the beginning and you're suddenly starting some other technique. Like first you have to that you're just a sole proprietor, you started a business. But when you felt that it's getting burden to you, you bought some other partner as a person, some other partner, and you have joined with him. And now you are telling after further things, again you are telling no, we are even unable to manage even after we have 2 partners. So I want to make it a joint stock company. How come it's possible? So first you have told it is sole proprietor, it is partnership, and then joint stock. It's not possible. In the same way, few companies follow single entry system. Or I'll give you the other example, like few people follow a method of straight line method of depreciation for 6 months. Then or 1 year also. For 1 year they follow straight line method, and another year they follow diminishing balance method. Then how will they understand how to evaluate what is the thing happening in the business? So it's not done. So either follow diminishing balance method or straight line method. So that's what the consistency says. And then the last point left is materiality, convention of materiality. So what this convention says is basically consider only the material but not the unnecessary things that is related to that. Only the material. As I told you, only quantitative aspect, in the same way only material but not the unnecessary things which is related to packaging, etc. All the things are related to materiality. Need not consider anything but just consider the materials. So that's what the convention says. So I hope you are clear. And what are the conventions? Let's revise it once again. Convention of conservation, conservatism, convention of full disclosure, convention of consistency, convention of materiality. Now I hope you understood the examples which I gave to each and every point. Like I told you, independent corporate existence, yes, and going concern concept, I also told you the example for this. Like it should be going, it should never stop. Like I told you the life example, and then money measurement concept, qualitative and quantitative aspect, like this. So I hope you remember all the examples which will be very effective in your paper when you are writing an exam, and also you can explain it to others, that will easily go into the mind, and that is really effective. So that comes to the end of the session. If you think I made a relevant to this video, please like, share and subscribe, and thank you. Like few people were requesting me to also make some videos related to economics, because I told you BEFA, Business Economics Financial Analysis. So as I only making the videos related to financial accounting, they also asked me to make the related videos related to economics also. We are coming soon with all those videos. So till then, stay tuned to Straight Star. Thank you.